In this video, I'm going to show you how to prepare the cash flow statement. So previously, we have been focusing on recording for cash using the general journals, which are then posted into the general ledger of the bank account. So here is an example of a transaction on the 5th of December where there was a capital contribution of $5,000. Once the general journal has been taken up, it is then posted into the general ledger of the bank account on the debit side for the amount of $5,000 with a cross-reference of capital account. Before we can prepare the cash flow statement, we need to know where we can find the details of the cash transactions. One of the ways that we can identify these transactions is through the statement of receipts and payments. It is basically a report that details cash receipts and cash payments during a period and changes in the bank balance. FYI, you are not required to prepare this report as part of the unit, but it is helpful to know that if you are given one of this report, you can certainly get the details from this report to prepare the cash flow statement. Another way of identifying the cash transactions that have occurred is to look at the general ledger for the bank account. The cash receipts are recorded on the debit side, and the cash payments are recorded on the credit side. I will refer to the bank general ledger for the preparation of cash flow statement that follows. The first step to preparing the cash flow statement is to work out the GST. Firstly, on the debit side, we can see two transactions with GST. They are GST received because they are GST on sales, and they form part of the cash that's received in a cash sale. So firstly, we work out the total sales with GST, and this is basically the amounts that have been received in the bank account. In this case, the total amounts to $47,300. Then we calculate the GST received amount, and we do this by taking the sales with GST amount divided by 11, and this gives us $4,300. Finally, we work out the sales without GST amount, and we do this by subtracting the GST amount from the sales with GST. In this example, the amount is $43,000. Next, we need to do the same thing for the cash payments. Basically, the GST that is attached to the cash payments would be called GST paid because they are the GST on purchases and they form part of the cash payment in a cash purchase or cash expense. Similarly, we would calculate the purchases with GST, and in this case, I've also separately categorized them depending on the transactions that have occurred. Then we calculate the GST paid amount, followed by the purchases without GST. In this case, I have basically taken the amounts with GST and divided them by 1.1 to give us the amounts without GST. The next thing that we need to take note of is any GST refunds from the ATO or any GST settlements to the ATO. Here on the 4th of December, we have a transaction recorded on the credit side of the bank's general ledger. And because it's on the credit side, we know it's a GST settlement because it is a cash payment and it is a payment made to the ATO for GST liability. Also notice that it is not attached to any purchases in the general ledger. I would like you to think about GST refund from the ATO. Would it be recorded as a cash receipt or cash payment? And will it be recorded in the debit or credit side of the bank's general ledger? You may have answered correctly, and the answer would be to record the GST refund in the debit side of the bank's general ledger because it would be a cash received from the ATO. Now that we have worked out the GST, the next step is to classify the items in the cash flow statement. The best way to prepare the cash flow statement is to work from the bottom up. So we start off with the financing activities section because only 4 items can be reported here, and they are capital contributions, drawings, loan from bank, and principal loan repayment to the bank. Then we move up to the investing activities section, where only items related to non-current assets are reported here. They could be purchases of non-current assets or sales of non-current assets. Finally, all other items are reported under the operations section. Examples are cash sales, GST received, GST refund, GST paid, GST settlement, receipts from accounts receivable, payments to accounts payable, wages, and interest expense. So basically, any items that cannot be allocated to financing or investing activities will be allocated to operations. Now take note that interest expense is reported under operations while principal loan repayment is reported under financing activities. Alright, so let's start with the financing activities section. So remember that only 4 items can be reported here. So the first one that we have is a $25,000 loan from Ost Bank, and that's money coming into the bank account. The next one is capital of $5,000 coming into the bank account. Next, we have drawings of $6,700. And because this is a cash payment out of the bank account, we need to make sure that we are writing the number with brackets to show that it is a negative amount. The next one is a loan repayment to Ost Bank for $2,000. And again, please remember that we do not report interest payment here. We only report principal loan repayment under the financing activities section. Next, we calculate the subtotals of the positive amounts coming in and the negative amounts going out. Then we work out the net cash flows from financing activities by taking the $30,000 minus the $8,700. Next up, we have the investing activities section where we report only items related to non-current assets. So here in the 7th, we have a purchase of shelving for a total of $11,000 including GST. But here we need to make sure that we are taking up the amount without GST. And the reason being is because the GST will be separately reported under the operations section, which we will be looking into shortly. Next, we have a purchase of office equipment on the 26th. And this gives us an amount of $4,500 excluding GST. Work out the subtotals and the net cash flows from investing activities. Okay, so for our operations section, we are reporting all other items. So basically anything that weren't included in the financing or investing activities sections will be reported here. So let's look at the cash receipts first. And here we have cash sales on the 12th and 24th. We need to take up the total amounts excluding GST. And the reason being is because we are reporting the GST received on sales on a separate line. Next, we have receipts from accounts receivable. And the total amount is $41,500. Now that we're done with the cash receipts, let's look at the cash payments side. Here we have electricity expense of $500 excluding GST. We also have payments to accounts payable totaling to $41,400. We also have cash purchases of inventory totaling to $20,000. Again, this is the amount without GST. Next, we have wages on 2 separate occasions, and this totals to $31,000. We also have insurance, and this is the amount of $1,200 excluding GST. And next we have interest expense of $600. Again, remember that we report interest expense here, whereas the principal loan repayment is reported under financing activities. remember to take up the GST paid amount as well. So this is basically the GST that has been attached to all the cash purchases that we have made. This amount was also calculated in step 1, so you might need to revisit that if necessary. Next, remember to take up the GST settlement amount, which is on the 4th of December, and an amount of $1,500 was a payment made to the ATO. We work out the subtotals and finally the net cash flows from operations. Alright, final step. Here we calculate the change in bank balance. Previously, we would have worked out the net cash flows from operations, from investing activities, and from financing activities. So now we need to add up the subtotals, and this would give us an amount which would either be an increase or decrease in cash position. In this case, we did get a negative amount, which indicates a decrease in cash position. In other words, it is also called a cash deficit, where our cash receipts were less than cash payments. If it was the opposite, it would have been a cash surplus, where our cash receipts were more than cash payments. Next, we need to add our bank balance at the start, and we can get this amount from the bank's general ledger. So we are adding up our amounts together, which would give us our final bank balance at the end of $9,280. Last step is for us to check our cash flow statement to the bank's general ledger. So here we can see that we would have taken our bank balance at the start of $13,500 from the opening balance in our bank's general ledger. And if we have followed through all the steps correctly, we would have arrived at a bank balance of $9,280, which matches up to the bank balance as shown in the general ledger account. Yay!